Bear Put Spread, presented by TackleTrading.com. My name is Tim Justice. I am the COO of Tackle Trading and a coach at Tackle Trading, training traders how to, execute in the financial markets, options, stock, forex, and futures. Today we are going to be discussing what a bear put spread is. And a bear put spread is an options debit spread where you buy one put option and sell one put option in a vertical fashion. Options are derivative contracts, and they're very valuable, very, creative. There are a lot of things that you can do with the options market, and spreading them is a way to reduce your risk, reduce your exposure, reduce your cost, and also kind of create a unique situation. A bear put spread is an option strategy that involves two transactions. So you have to buy one put option and sell one put option in the same expiration month. The sold put option, also referred to as the short put, must be at a lower strike price than the bought put option, also known as the long put. By selling -1 put and buying +1 put at the higher strike price, you're initiating a debit spread. There's a cost to the trade, aside from the commission costs that you may have with your broker. It is thought of as a bearish play, which means that you want the market to go down. It is also a directional play, which means that the best way for you to build a profit is not from other factors, but literally just the price dropping is what's going to help you build a profit on this trade. That's what makes it a negative delta trade, and we're definitely looking for bearish setups. So, that's going to be your lower low, lower high, your breakdowns, your technical charts where you expect the price to drop over time. Now, this is generally thought of as a swing or position trade in that regard. You can trade a bear put spread over any time frame, a week, a month, 3 months, whatnot, but you usually are going to do it for, probably a position style time frame for 1 or 2 months. Look for bearish setups, buy a higher delta strike, sell a lower delta strike, and use intermediate term options. At Tackle Trading, we tend to, want to buy more time than we think we need. That lean on the side of caution mindset is going to go with that. And we are going to position size according to our portfolio plan, our risk, and our money management. You're going to set your target from the chart. Okay, so, make sure that you have your charting skills down. Set a stop loss technique as well. Control the risk in that regard. And, order execution can get quite advanced depending on the broker that you use. And stop loss needs to be in line with your skill set. Don't try to do something you've not been trained on, obviously, because you can get a bad fill. But make sure you know how to set your targets and stops and what you're going to do to deal with an event. Are you going to hold through earnings? Are you going to hold through economic events? This is where system development and system design come in. In a bear put spread, you're going to have a risk profile. It's going to look very similar to this right here, where the short put and the long put combined together create limited reward and limited risk. Your profit zone is on the left, and in a risk graph, that means the price would have to drop, in price, and your loss zone is on the right. So if you put a bear put spread on and the stock goes up, you lose money. That's reward and risk. And make sure that you've assessed your reward and risk ratio. If you're buying an in-the-money option and selling an out-of-the-money option, usually the maximum loss you want to take on is about 40% of the spread. So in a $5 spread here, we would not want to risk more than about $2 is what it comes down to. That is our bear put spread glossary definitional video. Thank you for joining us here today at TackleTrading.com. Make sure you like and subscribe to our channel here, and come and join us over in our community if you want to see what we're all about. We have shows daily, we have education, we have content, we have community, we have a lot of things going on. Keep in touch. We're on all the social media channels: Facebook, Twitter, Instagram, and of course here on YouTube.